Hello, everyone, and welcome to another edition of the Smart Investor Market Show, where smart investors get their up to date price analysis and market information. Okay, what we're going to speak about today is this idea of being permanently bullish or permanently bearish a particular market. I know some of you have listened to various newsletters, various opinion writers, various folks on the financial media, CNBC, people who write books, and there are a group of people that I consider permanently bullish or permanently bearish. When I attend conferences, for example, the World Money Show and the various investment conferences out there, you always go and you listen to these speakers, and they have the same message no matter what is happening in the market. So we're going to take a look at, we're going to say to them, is that something that is is beneficial to investors to be permanently bullish, or it's something that you should probably be wary of? But first, let me just look at what's happening. Give you a weekly roundup of the markets. S&P 500 is up today slightly at 2448. Quiet week, very range bound week. The US dollar is breaking down today, and we see the market trying to challenge this 92 level. I've spoken about this level on numerous occasions. Market is trying to break below this 92 level, so it will be interesting next week to see if the US dollar can close below that 92 level. Looking at the gold market, or firstly, let's take a look at crude oil. There's that hurricane that's threatening the coast of Texas. I hope everyone is safe over there. I have lived through many hurricanes, and I can tell you it's not a very good experience, especially if it hits at Category 3. If you're in a direct impact in a Category 3, that that would not be nice at all. So hopefully our thoughts are with the folks over there in Texas. Okay, but oil is up today slightly, and funny enough, I heard someone comment that it was a casual person. I was in the supermarket, and someone commented that with the hurricane, oil prices should really spike, and buying oil or oil stocks at this point in time should be good. And I just disagree. Oil is in a range bound situation, as you can see here on the chart. And unless we break out of this range bound situation, then I wouldn't be touching this sector. That's why it's good to look at what price action is telling you, and not invest based on hurricanes or your feelings. Other market to look at is the gold market, showing some very good signs. I have been speaking all week about gold and how gold is looking promising. We have this triangle, this consolidation pattern that gold is looking. It wants to break out of this consolidation pattern, and I say a close above 1300 to 1320 would be very bullish for this market over are bullish for the long-term prospects of this market. Now, this is a good segue to talk about the permanent bulls and the permanent bears. And I'm not going to name any names, but there is this popular investment analyst that always is bullish the gold market. He was bullish the gold market from much of the year 2000s, and gold was in a bull market, so he was largely right. And he was bullish the market in 2011, 2010, 2011, 2012, 2013, 2014, 2015. Now, what is the problem with something like that? Being bullish on market all the time, as you can see with gold here. Between 2011, the market peaked out at 1900, and the market moved sideways and then dropped down to nearly $1,100. While this investment so-called guru was bullish the gold market. He was recommending that you buy gold, while investors and folks who were following his advice were losing their shirt because the price of gold was going down. He was basing his analysis on inflation and on geopolitical crisis, and that was the gist of his argument. He was saying the stock market would stop going up because it's in a bubble, and and gold was the thing to buy. Gold was the hot investment. And what happened? We saw a diminishing and declining gold market. He was a permanent bull in gold. And on the flip side of that, he was also a permanent bear on the stock market. Now, listening to conferences after conferences, hearing him speak over and over. Well, if some of you can guess it, you can email me your guess, info@smartinvestorcentral.com, of your guess of the person, but I won't put it out here. Okay, but he was always bearish the stock market. And look at the beautiful trend to the upside we have in the S&P 500. Beautiful trend, market just moving up. And he was bearish this market. And the reason he was given for his bearish opinion is that the economic problems of the US and the United States haven't been fixed, and this rally is just another bubble, and it cannot last. Well, the fact is the rally started in 2009 and we're in 2017, and it has lasted and lasted and lasted and lasted, while he has recommended that folks stay out of the stock market. And that is what I consider someone that's permanently bearish the stock market in the face of overwhelming evidence that the market is going up. And that's why I encourage you guys to look at what price action is doing. Look if markets are in uptrends versus downtrends. So if a market is in an uptrend, it is a good indication that that market may just continue going up, and being bullish or taking a bullish stance on that market is a good idea. And on the flip side, if someone is recommending that you buy a certain market and the market is steadily trending downwards, then that is something that you should have a red flag out and say, wait, if this market is bearish, let me wait until the market turns around and starts to see positive action. And so you shouldn't be permanently bullish or permanently bearish in a market. I advocate the position to be a market opportunist. So if stocks are going up and are making higher highs, I want to be long the stock market. If gold is going up, I want to be long the gold market. If the euro currency is going up, I want to be long the euro currency. If the US dollar is going down, I want to be out of the US dollar, short in the US dollar. So that is a market opportunist. You just look at you look at markets that are giving opportunities for you to profit, and that's when you enter the market. So I'm not permanently bullish, and I say this because I get this question a lot. Am I bullish longer term prospect of stocks, or bullish the longer term prospect of a particular market? Right now, stocks are moving to the upside. Yes, the trend looks like it's going to exhaust itself, but the fact is stocks are still bullish. Now, at some point in time, the stock market will start to go down, and then I will change my stance, and then I will be bearish the stock market if it goes down from here. Gold. Right now, gold is looking like it's breaking out of its consolidation. So my stance on gold has turned to a more bullish posture. And I believe if gold can really clear this 1300 level, that would be very good for the market. So right now with gold, it's looking like the bulls will take it. And that's why currently I'm bullish the market. If the price action and the evidence changes, then I will change my opinion at that point in time. And that's the difference between having a opinion and sticking to it through thick and and thin, or following what the price action, following what the market is telling you. Right now, what's looking good is gold, but if it starts to turn around and the behavior starts to get erratic, I will certainly tell you and let you know, and will change my opinion. So that's how you make more consistent gains in the market. Be a market opportunist. Always be on the lookout for markets that are trending, and then try and take advantage of those particular trends. Okay, so that is it for this edition of the Smart Investor Show. Remember to like the channel and subscribe to the channel so you can get notifications whenever a video is shown. I hope you all have a wonderful weekend. Thank you very much for listening. This is Beyond Dale signing out.